Here in this video, we have all of your Tesla stock breaking news for the day and everything you need to know. And let me start with one thing that you definitely need to know is FSD has a new rollout going out to Tesla employees, 12.3.1. Here you can see a post from Tesla Scope today that says, "Good morning. Tesla began rolling out full self-driving beta V12 3.1 to employees via 2023 443030 for the first time. Simultaneously, Tesla also deployed new features to employees, including improved driving visualizations and auto park." It seems like the improvements are rolling out at a very fast rate right now. And the reason that I talk about this so much now is you actually have a product that a lot of people are referencing are robotaxi worthy. A lot of Uber drivers are already using FSD with zero disengagements, and basically everyone you hear from, well, loves this new reiteration of full self-driving. And I think a lot of people, throughout all the noise, this quote-unquote slower demand and everything that's been negative for Tesla cutting prices, margins falling, a lot of people don't even remember what was going to give Tesla the exponential gain, and that was the robotaxi network. That was the evolution of full self-driving. And yeah, you've had some give back with margins and demand now, quote-unquote demand now. We still don't know what demand really looks like. People just think it's slower. But the point is, from the start, back in 2021, it was all about the robotaxi network. That has been the thing that was going to be the driver of Tesla stock. And now we're getting closer and closer to the realization of the robotaxi network. There's a couple things we need to figure out, like who's going to take liability. If you're running a robotaxi network, maybe a driver-free robotaxi network, and the car gets into an accident, somebody T-bones your robotaxi. I mean, who takes liability for that? We don't know. There's no good answers for that right now. There's insurance. That's probably, what would ultimately come back to. But minus all of those, and you're looking at your cash cow for Tesla for decades that is finally almost here. Now, Tim Cook back in 2017 said full self-driving cars are the mother of all AI projects. This is the greatest value creation to the human society that you can do with AI. There will be nothing bigger than saving 50,000 lives a year. Freeing up thousands, millions of people to have more free time to do what they would like to do. Overall, just a better, easier, safer way to commute. Plus, a rider-free robotaxi network, that's huge in and of itself. There is nothing bigger than this, is the point. And really, all you have to do is just get on X and scroll a little bit. And you're going to come across testimonials from individuals that have FSD, that bought FSD, that didn't like FSD, and now they love it. You have Dell's CEO that is talking very favorably about it. And just overall drives that you'll see you are very close to something great with Tesla. Wall Street is just so caught up in margins and deliveries that they don't even see what's happening in front of them. This never happens on Wall Street. This never happens on Wall Street, where you have a company the size and scale of Tesla and everyone is missing what's going on under the surface. Wall Street is effectively asleep at the wheel. And that doesn't happen very often. You could say the last time Wall Street was this asleep at the wheel was the great financial crisis, when everything was tumbling from internally and everyone was asleep at the wheel, super bullish, didn't see what was coming. I think you can kind of compare that to this with Tesla's FSD. It's literally in plain sight. But yet Wall Street just doesn't understand. That's why I believe there is a window here before Wall Street actually figures out the robotaxi network is likely to start getting deployed over the next 12 months or so. Again, the biggest thing stopping that at this point, given where FSD is and the zero disengagements, I have not seen a video yet that has actually shown a disengagement of FSD on 12.3. I just haven't. I mean, if you guys can point me in the right direction, that would be great. I would love to see a disengagement on FSD V12 3.1. I just haven't seen one. So you are probably 12 months away from the robotaxi network. Once Tesla figures out who's going to take liability, how insurance is really going to work for the robotaxi network, and I don't think that's going to be a block to the robotaxi network. If you think about it like this, if FSD is so much safer than the average driver, if the average driver gets in about 2 accidents every 500,000 miles, most of which are just minor kind of, bumps, if you will, not bad accidents. But if you say FSD has 1 crash every 5 million miles or so, then what is FSD, V12 3.1 going to give you? Something similar to that, I would expect. There's always going to be someone that just blows through the 4-way or whatever. But the crash rate's going to be very low. I think you can minimize that risk with insurance plus the dollars coming in from all the robotaxi rides to make it make sense for Tesla to even take liability of the accidents for their robotaxi network. I mean, that's just me kind of speculating here, but you can see how it would make sense for Tesla to take liability once the product is this good. And once that's out the way, I mean, you're golden. Tesla can start actually putting permits in different cities, or applications, I should say, for the robotaxi network. And I think you are closer by far than you have ever been. In the last couple of months have been impressive. I think the next couple of months are going to be even more impressive. And eventually this will get reflected in Tesla's stock. I think that's the main point here. Eventually the markets will realize the robotaxi network is coming. The biggest evolution to the human species in a long time is finally almost here. I'll be damned if that does not add hundreds of dollars to Tesla's stock price. But then again, we are going to have fears and concerns over demand, over margins, over different things here in the near term, so keep that in mind. Gary Black says, with 1 week left in Q1, there's risk Tesla Q1 volumes come in well below Q1 consensus estimates, which stood at 468,000 this morning. My Q1 estimate is 425,000, which is roughly flat from 2023's Q1 of 423,000. Tesla will likely send out their IR compiled summary Friday or Saturday and report Q1 volumes on April 2nd, the day after my birthday. So not quite April Fools. Investors will give Tesla a Q1 pass for the shortfall caused by the M3, the Model 3 upgrade at Fremont, which we estimate cost 30,000 units year over year. Tesla management is likely to disclose the Model 3 shortfall on their P&D report on April 2nd. A bigger potential issue is Q2, where 2023's Q2 was 466,000, which may also be difficult to beat and may lead to more price cuts. 2024 Q2 consensus is 504,000. That's insane. Now, I kind of disagree with Gary Black here when he says it may lead to more price cuts. I think Tesla is on the path now to focusing more on profitability, and I think that will directly translate to a higher stock price in Tesla. The markets, they're not going to care about what deliveries are like if you're bringing in more profits. Just like Apple. Apple has been negative on a year-over-year growth basis for a long time now. 5-6 quarters, something like that. And Apple's stock has done very well. Apple stock comparatively to Tesla, it would be like Tesla at $380 or so. Because Apple has, maintained their margins. Apple's not cutting price of the iPhone to sell more iPhones. So that's the path that I think Tesla is on. And I think coming on this earnings, I think Tesla's going to explain that a little bit more, that they are now focusing on profitability over just growing unit volumes. After all, that is what this market demands. Could I be wrong in that? Of course. The 3 main reasons why I believe Tesla is now focusing more on profitability are as followed. Tesla did not give full year guidance. If you were shifting from focusing on unit growth to profitability, the first step would be not giving a full year guidance. That was step number one, and I said it after the earnings that Tesla was going to focus more on profitability. What has happened since? Tesla did a temporary $1,000 price cut on the Model Y. They raised that back, and then they raised $1,000 on top of that, or they're going to raise the Model Y $1,000 on top of that. That's step one to focusing more on profitability. They're actually raising prices now of Tesla products. Number two was the reduction of the Chinese work week from 6.5 days a week to 5 days a week. That's likely a way of keeping their current employees, but reducing their hours. So Tesla likely saving some money there. Who knows exactly what that means for production? We could speculate whether that means less production or, not much of a change there. Maybe there's excess kind of hours that are being worked that don't necessarily translate to more vehicles being produced. I think Elon's going to make the best decision there, and I think that was also a step to become more profitable. So those really three things are leading me to believe Tesla's going to focus more on profitability here. After all, if they want to continue to invest to grow Giga Mexico, continue to invest into more AI compute, which they're no longer AI training compute for FSD, but if they want to continue to invest at this aggressive pace without sacrificing Tesla's stock in the meantime, which I don't think makes sense, then you need to take a focus on profitability. It'll make Tesla's life a lot easier. Now, Gary Black goes on to say the issue becomes what PE multiple do investors put on a company with little or no volume growth. This is not about whether Tesla is a car company or a tech company. It's clearly a tech company. But without earnings or volume growth, Tesla's 2024 PE of 57x on Wall Street's 2024 estimate of $3.01 and 2025 PE of 42x on Wall Street's 2025 estimate of $4.02 looks vulnerable. The possibility of FSD level 4, level 5 autonomy, where Tesla assumes liability for FSD injury or damage, could solve the valuation issue. But in my opinion, Tesla management isn't there yet. Yeah, they're not there yet, but I think they're going to be there very soon. Very, very soon. And that's funny that Gary Black is saying that the multiples here on Tesla would make sense if Tesla were to assume liability for FSD and you could actually start to roll out the robotaxi network. Reading between the lines, that's pretty much what Gary Black is saying here. Now, I also explained this in some of the other videos. Tesla is pound for pound the most efficient machine it has been ever. When you start to get price cuts, that's where profitability will explode. But I think here in the near term, because I believe Tesla will start raising prices as the monthly payment amount goes down for new people buying new Teslas. But nonetheless, even here in the near term, Tesla to start incrementally raising prices, cutting hours, doing what they're doing now is really going to help Tesla become more profitable. And I don't think we're going to get more price cuts. So I think earnings estimates are likely to go higher. So if earnings estimates go higher for 2024, really 2025, then that means the PE multiple is also going to drop, which if you keep the same PE multiple, that means the stock would go higher. And that's exactly my expectation in 2024. Now, maybe not here in the super near term. I think the markets need to get over this hurdle that Tesla is now going to focus more on profitability. And I think we're in the speculation, the early stages of this. But if I'm correct, this means Tesla stock is going much higher from here. Especially if the Tesla team starts talking about the robotaxi network the way in which they used to. Oh yeah. The gains are going to start rolling in. And Wall Street's going to look very dumb. But again, I think there's only a small window for this, maybe a month, 2-3 months before Wall Street starts to realize, one, the robotaxi network is well on its way to becoming a reality. And number two, Tesla is focusing more on profitability than growing volumes. Tesla has officially rejoined Facebook and is officially doing paid advertisements on the platform for the first time ever. Tesla originally removed its Facebook page 6 years ago. Facebook has over 3 billion monthly active users, or approximately 37% of the global population. I love this move by Tesla. Sure, if you're Elon, you're kind of ceding to Mark Zuckerberg, at least a little bit, going back onto the platform. Probably not great for the ego battle that those two have, but for Tesla specifically, I think this is a much better use of advertising dollars than Google. Because remember, what you're trying to do is get in front of people that are not already exposed to the Tesla ecosystem. Now, if you see advertisements, the logic with advertising is not someone's going to see your ad, run out and go buy the product. That's the best case scenario. Of course, companies want that to happen, but the reason you're actually advertising is to keep the brand alive in someone's mind. So you get into an accident 3 months from now, your car takes a poopy dupe, or whatever the reason is, your vehicle, you're vehicleless, right? You have no vehicle anymore. Subconsciously, your brain is powerful. It remembers these advertisements. Even if you don't remember the specific advertisement from Tesla, you may think about Tesla when you're thinking about a car to get. And for demographics like mine in Michigan, I mean, Tesla's not a top of mind choice when people are thinking about getting a new vehicle. If you can get in front of people like my peers, you may actually see an improvement from advertising to this demographic. Now, if you live in California, you live somewhere where Teslas are very, well known and prevalent, well, maybe advertising is on Facebook is probably not the best route because everyone already knows about Teslas. It's top of mind if you're going to get a new vehicle. But in certain areas outside of big metropolitan, demographics, this is the right move, especially to be advertising the low price that Teslas are now selling at, $36,000, including the federal tax credit for the Model Y. That's incredible because most people think Teslas are still very expensive, whereas a lot has changed, as you know, if you're an investor in Tesla in the last 2 years or so. Ashok Alaswamy reposted this. It's a Tesla on full self-driving that navigates construction, like heavy construction areas flawlessly, perfectly, better than you would if you were driving this car. And I recommend you guys go ahead and watch this. I will share this now for you. But Ashok Alaswamy, he is the autopilot AI lead at Tesla. He says handling many real world situations like construction requires understanding and reasoning about the scenes semantically and not just geometrically. That is why full self-driving is an intelligence problem and not a sensor problem, i.e. needing LiDAR, radar, etc. You actually have to have the car intelligent to be able to handle these kind of situations to make the best decision in the wrong scenario, right? You get in a really bad situation, you got to have the car being intelligent. Radar, LiDAR is not going to help you in that scenario. And if you actually look at this video, I'll just go ahead and play it. I'll turn the audio off, and it's phenomenal. I mean, the way that this Tesla can navigate this construction, nobody would have been able to do this as well. And it's not quite here yet. It is further up where it just gets super freaking weird. You're not allowed to turn this way. You're not allowed to go this way. And the people read the subtitles. They're speaking in a different language, but they're like shocked. At one point, he says they love the brain in the car, like love the computer in the car. And yeah, this is the trickiest situation because the car, I believe, wants to go left, but you're not able to. So it kind of weasels in here a little bit, and then it's like, nope, we just got to go straight. And it just goes straight. Look at that. And this is where they kind of, yeah, boom. Perfect. It says, absolutely love the brain of this car. But I mean, there's so many different scenarios like that FSD is starting to conquer roundabouts that were troublesome, to say the least, on previous versions of FSD. They're just being handled like butter, smooth as butter. And if you've seen the videos, then you've seen, like, they handle roundabouts smoother than I do. It's truly an impressive world that we live in. And I think inevitably when you're seeing this kind of improvement getting closer to the robotaxi network, and ultimately in the not so distant future starting to see the robotaxi network get deployed in select cities first, and then you'll see a more mass market rollout after that, I believe Tesla stock will start to reflect that. Maybe I'm crazy, maybe I'm wrong there, but I think it's pretty simple. FSD is improving to the point in which you could start to operate a robotaxi network. Figure out the liability, fine, that will happen. But to say that doesn't translate into Tesla stock going higher because of the sheer profit generation the robotaxi network can have, I think you got to be crazier than your Tesla hodlers that bought at all-time highs. I mean, you're crazy to think that this is not going to have a very positive impact on Tesla stock. Forget the deliveries. Forget the earnings that we're about to get. It's probably not going to be too great. Tesla starts to focus on profitability. Tesla starts to, showcase that they're going to be rolling out the robotaxi network in the not so distant future, and it's game over for the shorts. That's really the bottom line. I also think in 2024 and 2025, you likely start to get this halo effect that will have a very positive impact on Tesla's entire brand lineup, with Google trend numbers for the Tesla brand itself really just continuing to go higher. Now, today is the first tick down lower that we've seen in a while, but it doesn't look like the data is fully finalized. The Model 3 going from 38 to 35, the Model Y going from 36 to 35, and the Cybertruck going from 36 to 35, the Tesla Model X going from 11 to 10. But this is all after a huge rise in search trends that we have seen really to start 2024. You kind of bottomed the third week in 2024, and you've been rising ever since. And Tesla is now running about 4,000 different ads via Google, and likely, a couple thousand more via other platforms as well, like Facebook. Sentiment over on StockTwits for Tesla is bearish at 33. This is really as to be expected. Over the weekend, you just get less people talking about Tesla normally, and the bears like to come out over the weekend. So you see this happen basically every weekend, where people just get more bearish over the weekend. Message volume is actually a little bit higher today than it was yesterday at 53. Yesterday was at 50, and the participation ratio today is at 55, which is a very healthy level, and really just where we have been for a while now, showing that there's a lot of accounts talking about Tesla. There's a lot of accounts talking about Tesla on StockTwits. That likely means there's a lot of people looking to buy Tesla stock as well. I also believe that Fed Jerome Powell is looking for any reason he can find to start slashing interest rates, not cutting them, but slashing interest rates. Because if you look at where the inflation actually is in services, whereas you've been seeing goods deflation for a while, real estate's obviously not being affected by the Fed raising rates. You've crushed the real estate market. Things are not moving around much, but the Fed cannot control immigration and the demand for housing in that sense. There's just more of a demand for housing. So the federal funds rate has been very effective in affecting banks, real estate, the auto market, but it hasn't been effective, and it won't be effective in affecting services. So really, if you look at the goods part of inflation, the other areas of inflation besides services, you're actually slightly deflationary, whereas services are really the ones that is rising, up 6+% on a 3-month annualized basis. The Fed has no control over that. There's nothing the Fed can do that will control that. I think the Fed's just looking for an excuse to start really cutting rates. Now, if we get those rate cuts without a recession, that's great news for Tesla. And currently, markets are expecting the first cut in June, but you could see quite a few cuts this year if you do start to get data that starts to look negative. And this upcoming week, we're going to have just the data that could prompt the Fed to start cutting rates. Not saying that's going to happen immediately, but this data will be important coming this week, and we'll go over that in the next video. Global inventory numbers for the Model Y still at pretty much record highs at about 7,500. Model S, Model X, Model 3 inventory sitting at very low levels, not quite 12-month lows, but pretty dang close to it. But then again, I don't think a lot of people talk about this catalyst for Tesla. And Tesla Chan wrote this post about it. He says, I've never thought that FSD licensing is as solid a future as it has been recently. This will have a huge impact on future EPS upside, and it's a huge margin trap. Now, you can think about FSD licensing like everyone's going to capitulate to FSD technology, just like they did with the charging network. Tesla was the first to roll it out, and they really got such a lead over everyone else that Ford, GM, Stellantis, everyone, they're like, we can't compete with the supercharger network. Like, we're never going to be able to compete with that. So we'll just license it. And that's pretty much the same scenario that I think other automakers are going to be in with FSD. And likely when you get one that signs on to the FSD deal, whatever that looks like at the time, you're probably going to get others as well. Because let's be honest, GM, Ford, nobody's going to be able to develop an FSD software that will be able to compete with Tesla. If they do, it's going to take decades, likely decades from here. And all of what we've talked about here in this video, they're not small catalysts. These things are not small. These things are the difference between Tesla at 170 and all-time highs. And Wall Street is missing it. Robotaxis, Tesla focusing more on profitability, licensing of FSD, which is inevitably coming. These are things I think you just got to have a time horizon on that is longer than 6 months or 12 months. And I think you get rewarded heavily for investing in Tesla at these current prices. Maybe I'm wrong. I'm just a guy making his, videos here, just my opinion. But let me know what you think down below in the comment section. That is going to go ahead and do it for this video. In the next video, we have a jam-packed one for you of all of the events coming this week and everything you need to know to get your week started with Tesla stock. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your weekend. If you guys want to come trade with us live in real time, check out that link down below in the description of this video and follow the X account. It is Michael Tyler over there. It's free 99 and costs you absolutely nothing to do so. I share a lot of what we talk about in these videos first over on X before we talk about them, including breaking news when and if breaking news ever comes out for Tesla or the broader markets. You'll be updated first on X before a video is put out. So follow the channel over there. Again, it costs you nothing to do so. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.